Hello traders, hope you guys are good. Welcome to our lecture number 4. And this lecture is going to basically decode everything that we've learned in the past lecture. I know the past lecture might have been overwhelming or confusing because I introduced a lot of things all at once, but that is just the introduction to the core ideas. Now we're going to break each and every idea or each and every topic into depth. We are going to decode the footprint, the delta, and the volume. So there will be no way you'll be confused. And this probably is our lecture for this beginner course. And to have access to the next lecture, which is lecture number 2, next course number 2, you will have to again subscribe. This isn't costly. Reason why I did this, reason why I separated these lectures for people to have a second choice. Probably by the time you reach this far, this is no longer interesting to you. You're like, I don't really like order flow. But if I put it all at once, meaning you would pay a huge amount of money for something you don't really need. So I decided to divide them into two so someone can decide whether to continue or not without feeling like they are cheated of their money. So in this lecture today, which I call market precision decoded, we are going to decode each and every aspect of the footprint, of the delta, of the volume into depth. So you will have to understand. We said here there is no guesswork. We don't work with patterns. We don't work with a hanging man. We don't work with all your candlestick chart patterns. We don't work with them. We only work with one thing here, and that is market data. So today we shall start with the footprint. And in the last lectures, we studied that the footprint has two parts. We have the bid and the ask. So we said on the bid side, we have two types of orders. We have limit orders and aggressive orders. And we said our bid has limit buy orders, and those buy limit orders are executed by aggressive sellers. So aggressive sellers sell to the buy limit orders on our bid side. And we said on our ask side, we have sell limit orders, and those sell limit orders are executed by aggressive buyers. And that is why we say passive orders do not transact between themselves, as well as aggressive orders do not interact or transact between themselves. So aggressive orders only transact with passive orders. And since you know I've taken you through the footprint already, I want to clean up a few things, because our footprint looks like this, but you might as well call it the delta footprint. Why? Because it's showing you aggression. Do you get my point? It is simply showing you aggression. So if you see 33 to 1, reason why my footprint looks like this, I told you already. Don't mind the lines here. These are simply wicks. And we said right here is the body. The same candlestick you learned is the same candlestick here, but we are simply looking inside the candlestick itself. And we said this is the cause for the formation of the candlestick, or simply candlesticks have been trading for long only show you information that has already been done. So candlesticks are delayed information to you. So what is the information behind the candlesticks? This is the right information we are looking at. The body is right here. This is the candlestick body, and this is the high, and this is the low. So don't mind the lines, the crossing, the x's. That is nothing. Let's just take the core logic behind. So we said if you have a cluster and it's showing you 33 to 1, this cluster is simply telling you on the bid side we have 33 aggressive sellers, and on the ask side we have 1 aggressive buyer. That is why you might as well call it the delta footprint, because it's showing you everything done already aggressively. Or simply the smart tape, we've covered that. But let's just try to understand and focus on this very thing that we have right now. On the next cluster, we have 3 to 1. So we have 3 aggressive sellers and 1 aggressive buyer, and so on and so forth. It is the same logic you're going to apply. I don't really want to waste a lot of time on this, because we want to focus on the core logic. We want to focus on the core ideas of the footprint. We want to understand deeper than what we see right here. And I promise you, this won't be confusing. It won't be overwhelming. You will just feel relieved, because you feel like you have studied something that you've been waiting for long, all your life. Because all your life you've been lied to. They have scammed your money from you. They have taught you things that don't really work. You've traded, you've developed self-doubt because you felt like you failed to master a simple thing, because you were given incomplete information. And that is the only reason your profitability took so long. That is the only reason your mind was so distorted. But with this lesson, with this lecture number 4, our last lecture for this course, you will understand the basics of the order flow market prism. You will understand the basics of market money mechanics. You will understand how to actually execute trades using simple order flow tools. You will understand how to place your stop losses and take profits, and you will also understand some little bit of risk management. So it's a beginner course, but it's packaged to give you the whole course, or it's a package to give you the whole thing. It is a whole package for you to start trading. And for you to access the platform I use, you need to subscribe to Atta's trading platform. So Atta's will be the perfect trading platform for you to learn order flow, to use order flow. Why? Because everything has been simplified. You don't need to do the work, and it is as cheap as 24 to 25 US dollars for the start. You can imagine, so cheap, yet it's giving you top tier information. So my friend, let's get into it. So we said the footprint, normally if you don't want your footprint to look like this, you can flip it to the delta side. Why did I say delta? Because you can use colors. So by using these colors, red or green, you can easily study aggression in the market by simply looking at colors, because I know numbers are so overwhelming, my friends. And as a person, I also don't spend a lot of time looking at the numbers. I want to make things simple for myself. As a trader, if you are an intraday trader, you won't spend more than 5 hours in the market. You only have an hour or two to make profits and be done for the rest of the day. You're not a swing trader. If you're a swing trader, then you're going to hold your trades probably half of the day or throughout the day, or probably for a week. Depends to your own strategy or your own type of trading. But as you can look right here, my footprint, if I go from here 33 to 1 on my delta colored footprint, it shows me 33 to 1 in a red cluster. This is a red cluster. What does that mean? It simply means we have more aggressive sellers than buyers. So I want you to understand, the brighter the color, the stronger the aggression, or the stronger the difference. So here we have 33 aggressive sellers and 1 buyer, but it is only a little bit red. Why? It's only 33 aggressive sellers. Nothing special about them, right? Nothing really special. Only 33 to 1. Might be huge difference of 32 more aggressive sellers than buyers, but it is only 33 sellers. So what is the difference? No big difference, right? So 3 to 1, no big difference. 0 sellers, 6 buyers, no big difference. Little bit green, little bit green, little bit green. And as we see, when we get to the bright side, we have 195 aggressive sellers to only 53 buyers. So we have more aggressive sellers than buyers. That is why the color has changed. So I told you guys that these colors can be changed to your own liking. Probably you want to use white, blue, yellow, whatever color you want to use, my friend, use that exact color. The whole thing is you to understand the logic behind. That is the major thing to do right now. So when we look at the top best colored clusters in this footprint, we can see that we have 331 aggressive sellers and only 75 aggressive buyers, which is a really big difference between these two. So with this big difference, the cluster will increase in color. You can see we have 403 sellers and only 91 buyers. Very huge difference, and very bright clusters. So like we said, these clusters communicate something to you. If a candle is mainly dominated by aggressive selling, the candle will be probably bearish or red to me. If that candle has so many aggressive buyers, it's dominated by aggressive buying, the candle color will be different, and I expect price to be going up if the aggressive buyers are stronger than sellers, and vice versa. So we said from this you can flip it to know the volume and to know the delta, the difference, the real difference behind. Because if I only look at this candle has two types of traders. It has aggressive buyers, aggressive sellers. So I want to know how many more sellers are there than buyers, or how many more buyers are more than the sellers. That is what we call delta, and I mentioned that to you. Then also volume. I have put this before, and we talked about the volume and the delta, and we said delta is the difference between aggressive buying and aggressive selling. That difference, it's so easy, man, yet there's a lot of functionality to it. It reveals whether buyers or sellers are exerting more immediate pressures. Who is willing to push the market to their willing? Who is willing to take the slippage, the spread? Who is willing to be filled in at a bad price? That is simply the aggression or the urgency or the immediate pressure we are talking about. And volume is simply the total of buyers and sellers. So volume will simply tell us active market participation, and it can also help to tell us whether we have real intention in the market, whether we have real big players in the market, right? It's so easy to use, man. So let's continue. Let's focus on the delta first. So we said delta shows us the difference between buyers and sellers. On this side, we have the bid and the ask. And we said on the bid, we have aggressive sellers. On the ask, we have aggressive buyers. So in this particular cluster right here, we have 33 aggressive sellers and 1 aggressive buyer, which gives us a difference of 32. So 33 sellers minus 1 buyer, it means we have 32 more sellers than buyers. So sellers are dominating at that price level. Second cluster, 3 sellers, 1 buyer, 2 more sellers than buyers. That is simply how you're going to use it, bro. It is so easy to use, yet people don't really know that this information exists. Or probably if they know, they are scared because they think it's very hard to decode or to digest this type of information. Bro, there's a lot of numbers. There is this, there is this, there is this. Man, shut up, man. It's so easy to work with these things. It's so easy. If you only understand the core logics, this information is so easy. I don't want you guys to think, oh, this guy is not looking at us. Yeah, my camera is right here, but my screen is right here. And I'm looking at my screen. And I know you see my screen. So let's focus on that. So from that, we have the volume. And we said volume is the total, as you can see, 33 sellers plus 1 buyer equals to 34 total contracts traded at a price level. So volume will also help us to identify active market participation. So these 3-4 things are the core logics to what I'll be covering today, and from this you will learn a lot of things, and in that you have to note down these things that I'm about to mention. You can use the delta footprint to know if we are in absorption or a rejection phase. And trading is so easy because we said for us to trade and be profitable, we need to understand 2 things about the market. Market moves from areas of value or areas of acceptance looking for more value. So for me to anticipate market movement, I need to know if price is accepting the value it's at right now or if price is rejecting it. What does it mean? If price rejects that particular level, it means it's gonna look for another price level, which means I might get a setup for price movement, probably up or down if it is rejecting. If price accepts that particular level, I know price is gonna be consolidating in that particular level. So I might as well trade the value area. These things, I'm going to mention 1 or 2 new things just to keep you guys interested, knowing there is more. We're going to learn more. I'll be covering a lot of things in this lesson. So guys, please just be attentive. So now that we know we have the footprint, delta, and volume, and I've said we are looking for absorption, spoofing, we are looking for acceptance or rejection, we can get all those using our delta. So today we shall be diving deep into the delta footprint or volume or the footprint. Same thing, right? It's so easy, man. Let's get straight to it. Okay, without wasting any time, let us dive deep into footprint, delta, or simply the 3 topics that we mentioned: footprint, delta, and volume. So we are looking at the footprint delta, footprint colored delta, that is the colored footprint, and we are mainly looking at the delta itself. So with the delta, we are going to divide it into 2 parts: positive delta, negative delta. So the positive delta has 2 parts and the negative delta has 2 parts that we are going to cover, and these 4 topics we are going to put them together with volume. Like we said, volume is the total number of trades. Yes, it is the total number of trades. So we're going to put it together and put something together for the execution part. So what does it mean when we say positive delta and rising price? Or what does it mean when we say positive delta and falling price? Kevin, what do you mean? You put something up, negative delta, falling price, and negative delta, rising price. You didn't mention anything else. Yeah, bro, this is what I mean exactly. So positive delta means the delta of the footprint, the candlestick we are looking at, is positive. What do I mean? Positive. Positive is a plus, right? And the plus means buyers, right? So price is going up. So the delta being positive, we have more, it means we have more buyers than sellers. But if the delta is positive, we have more buyers than sellers, and price is falling. What does it mean? We'd like to see positive delta and price rising. That is the standard way of it. Has to be positive. More buyers equals price going up. More sellers equals price going down. What happens if we see the opposite? More buyers, but price is going down. Kevin, what do you mean price is going down? We're gonna get into it, bro. It is so interesting, man. It is so interesting. So right here, I've put a couple examples for you guys, and let's look into them, starting with the positive delta and rising price, right? So our delta has to be positive. What do you see? In this leg up, what do you see? Positive delta. There's more buyers than sellers. My buyers in this scenario stand for blue, and my sellers stand for red. So there is more blues. So buyers are dominating in this price leg up. Blues, which means buyers are stronger than sellers in this particular candle right here, in this candle right here, in this candle right here, in this candle. All this leg, buyers are stronger than sellers. But what do we see? Price is going up. It is good. We would like to see something like this. So whenever I see positive delta, let's say price closed here and I expected a reversal of a key level, and I see delta is becoming very positive, I want to go with a leg up. I would buy on the next bright delta from this rejection up, the next bright delta right here, and my stop loss probably below the candle or below the whole sweep, the grab that happened, and probably that will be a loss of probably how many pips? Let's say 50 or 40 pips, yeah, 50 to 40 pips, depending on the type of asset you're trading. Normally, I'm trading micro gold, and 1 tick equals to $1. So I'm risking $50 if I enter 1 contract. 2 contracts, more and more. Of course, you will do the math, yeah. I don't want to get into that part right now. I want to focus on this delta. It is so interesting. So when we see positive delta, we know price is accepting, or price is agreeing with a delta that we are seeing. Because look at my candlesticks, right? Look right here where we started. Positive delta, all in the same place. Price goes up. Positive delta, all here. See, 247, 100 aggressive buyers. Price goes up. Aggressive buyers. Price is going up. And what happens? We get a little bit of consolidation right here, but still the buyers, you can see buyers are dominating this area, and still price goes up. So let's go into another part. I will be explaining, I'll get back to this. Let's first outline the whole concept or this scenarios, but I'll get back to this. I don't want you guys to be confused. And what do we see again? Negative delta, falling price. Kevin, you said you're gonna show us the positive delta, falling price. Yes, we're gonna get back to that, man. Let's first cover the easy things. So we have negative delta, falling price, and what do we see in this leg down? The delta is so negative. Aggressive sellers are dominating in this particular leg down, and what do you see? Look at this. From up here, from where we had this grab, retracement right there, then sellers stepped in aggressively. I can see right here 153, probably you can see, but I can see. So you're gonna set your chart to whichever liking you want, yeah. So this I see 153, here I see 162, here I see 2241. So there's plenty of aggressive sellers. What happens? Price goes down. So what do I want to see? I want to see aggressive sellers dominate and price go down. If price goes down, I want to come into the market. I want to execute on the retracement into the bright clusters. And where do you see the bright clusters in this scenario? Right here, this cluster right here. So on this retracement, I will enter the trade, stop loss above right here. And that will be a perfect good trade, because look at this. The more the aggressive selling, you can also scale in. But for this scenario, for this type of setup, because this is not my A++ setup, it's probably my B setup, so I would not recommend scaling in. With time, when you get to my course number 2, I will give you setups starting from A++ setup, A+ setup, and B setup. So 3 types of setups that you will work with, from the highest probability setup to the moderate minimal probability setup. It will be so interesting, guys. So we can see aggressive sellers dominating in this particular leg, and the more the sellers, the more confident I get. The more the sellers, the more confident I get. Question is, Kevin, when do you get out of the market? Because we see sellers. When I see buyers stepping in, I'm gonna be out of the market. If I see delta flipping from aggressive sellers to buyers, I will be out, bro. I'm not waiting for I'm not waiting for slaps here. I'm not waiting for someone to take the money I've got it. If I put something into my pocket, I'm gonna run away with it. I won't put it back to the market, bro. And this is the right way to become profitable. Not people telling you, grow your capital, grow your capital. Because if you're a small trader like me from 2019, you make $100 US, you lose it tomorrow. You need to fund again, bro. It was tough times. It was tough times. So what I would advise you, probably have a capital of $100 in your account. You make 200, withdraw 150, leave there 50, bro. Leave there 50. Use something for 150. Eat it. You're gonna feel good. It's gonna build your confidence. Do something, bro. Do something with the money you make from the market. It builds your confidence. It makes you feel wise. It builds your ego. It is so good. That feeling is fantastic. You leave the $50 US. You will know first thing in your mind, now my capital is small. I have $50 US on my account. You won't over risk. You will grow it slowly. Then when you make some profit, withdraw it again. Leave the capital. Let's say from 50 you made 100, 150. So take the 50 now, leave 100 there. That is how you grow. As a trader, stop the bullshit that they tell you, man. People have been misled and it's so sad. It is so sad. So we can see as aggressive buyers step in right here, I will be out of the market. Look, as the buyers are stepping in, I can get out of the market. So now we know in this particular leg, the aggressive sellers are dominating. I'm gonna get back to that area in a few. So let's highlight it so we don't get lost. Yeah, it's easy for us as well. Right here is another example. Very huge, strong, aggressive selling. Sellers were dominating completely in the market. You can barely see aggressive buyers coming in from right here. We're gonna also get back to that later. I just wanna mark out a few things, man. I know it's a lot of numbers, it's confusing you, bro. Don't look at the numbers now. Forget about the numbers, bro. Look about the color. Just make sure, according to your exchange market that you're trading, try to filter out the trades or the colors so that it won't be a small insignificant trade, but the color will be bright. You get my point? It has to be bright color with a strong trade. You're gonna filter it out. How you're gonna do this? Go to the artist platform. They're gonna teach you functionality, everything, bro. I don't have to do that work. I'm your educator for you to make money, not to learn others, bro. Others is doing its work. So I'm not here to market for them this thing, yeah? I'm here to do my work. You get my point? So just go to their platform. You're gonna learn the functionality of Atas. So don't look at the numbers because the numbers are gonna confuse you. That's it. They're gonna confuse you. Let's look at the colors. And we know the colors are communicating the right information to us. So the right thing you have to do is to make sure colors are gonna communicate the right thing to you as a beginner, because you won't go around looking at all these numbers. It is overwhelming, completely overwhelming. So what do we see? Aggressive sellers right here. Price goes down. Kevin, what do you want to see? I want to see price close below the initial open, and if price closes below, I will buy on the next bright clusters right here, and stop loss above right here, and price will go down. When do you get out, Kevin? Let's say I'm aiming for the next key level down here, and all of a sudden aggressive buyers step into the market. I'm gonna be out. But if aggressive sellers step in more and more and more, I'm gonna scale in more and more and more, depending on that particular strategy that you will be using. Like I said, we have 3 models that we work with. So now we know aggressive buyers or positive delta with rising price. We know positive delta with falling. We know negative delta with falling price. So we're gonna look at positive delta, falling price, negative delta, rising price, right? We're just gonna get a little bit of this, then from there we shall try to dive deep in this concept that I'm introducing right now. So Kevin, what are you trying to show us? Look at this. This delta is negative, right? Look right here. Totally negative. Negative delta all the way. And what happens? Price is not going down. Price is consolidating in this area. And eventually, price goes up again. Even though we do have aggressive sellers in here. More than the buyers, actually. Look at this. More sellers than the buyers. And price is going down. What does that mean? Sellers are selling into a big absorption, or into a big limit wall. Remember what I told you guys before. Limit walls stop price. Limit walls stop price. So if I have a big buy limit wall right here, and sellers come in. Sellers need to eat all this order. Let's say it is a limit wall of 500 contracts to buy, and we have only 300 aggressive sellers. They're gonna sell, and this guy will buy all their orders, which leads to their orders to be activated, showing aggression to sell, but he still has 200 limit buys unfilled. What happens? The price will not go below that price level until his order is completely filled. We talked about this. Should be easy work for you. You didn't get it? Go back into course number 1. You're gonna get it. Or probably contact my team or contact me myself. I will help you through. I'll be very, very excited to help you through. So we see price falling and the delta is negative as well here, Kevin, why are you saying negative? I see some blues, bro. Look carefully. What do you see here? Huge negative, 194 aggressive sellers, only 25 buyers. What do you see? 61 sellers, 4 buyers. Look at this. Look at the buyers. 25, 1, 18, 0, 5, 3, 4. So it's a lot of these blues that are useless. The zeros, the ones, the twos, useless. The aggressive sellers are here. 194, 85, 61. They are more than the buyers. Look at this particular candle. Same thing. A lot of space that you might see the blue. The blue is huge. No, we're looking at the number specifically. Look at this. 1, 1, 1, 13, 1, 1, 3, 12, 0, 20, 50. Look at the sellers, bro. 96, 27, 10. It's huge aggressive selling, but price is rising or price is consolidating. That means we do have an absorption. I'm going to dive deep into that again. Let's look onto the positive price and falling price. Positive delta, falling price, yeah. So look at these particular candlesticks right here. What do you see? Positive delta. What is the most dominant color in these candles? Blue, the brightest, not the many, because it can be a lot of blues that have no information they're communicating to you. We want to see the brightest. Look at these blues, very bright, very bright. There's a lot of buying going on in these candles, my friend. Look closely, look at this 330, 929. Look at this 111, 238. There's a lot of buying going on, and what do we see? Price is literally consolidating. Then after that, we do have strong buying in this candle, but the candle is bearish. So it is falling price with positive delta. What does that mean? The buyers are buying into a huge limit wall, very huge limit wall. This is a beginner course. This is why some of the things I won't be going into so much depth, because it might be confusing. For you to get extra information, you need to go to course number 2. For you, by the time you subscribe to course number 2, it means you have understood course number 1. It has made sense to you and you would like to know further information. That is obviously why you will go to course number 2. So look at this right here. Positive delta, falling price, positive delta, falling price. You can look at this. Price comes back into retest into these bright clusters. You can see right here, retest, and goes down. Kevin, when do you enter? When price retests this and want to enter in the next bright delta that forms right here, then I'm gonna enter. And what happens? Price goes down. So, Kevin, you have briefly told us like you're going somewhere within these two concepts. Now we want to understand a major thing. How do you apply this to your day-to-day trading? Now listen, positive delta rising price is confirmation that aggressive buyers are strong and price is really willing to go higher. Positive delta falling price or consolidating price or stalling price is there. We are so positive but price is not moving at all. It means price is getting absorbed. Someone is really holding a huge limit wall. What do I mean? Positive delta. Price is supposed to be going up, but price is falling. It is stalling. It means there's a huge seller. You understand? Huge seller that is selling to them. So whatever they want to buy, he's going to sell to them, and price will not go up beyond his limit wall. That is the easiest logic or the easiest understanding of the whole market prism. And negative delta falling price, it means sellers are very aggressive, which means price should be going down to fill in their orders. What happens if sellers are aggressive but there's liquidity to actually fill them in? Price will stop falling, it will stall, or it will rise, which simply means there are very many aggressive sellers, but there were still huge buy limit orders to buy from them, which made price not go further looking for liquidity. Liquidity was already there, bro. So we want to know 2 or 3 things from the delta itself, because we say delta can help us understand absorption, and we said delta can help us know where to put our take profits or stop loss. And I just explained a little bit of absorption. We shall get further into that. Now the question is, how do you place your stop loss? Major question number 1. How do I place my stop loss? How do I place my take profit? Or even Kevin, you're getting to those 2 aspects before telling us, when do I enter? I just mentioned to you, bro. You see, rising price with positive delta, you want to buy where they're buying. More aggressive sellers, that's where you buy. But you see, positive delta, but price is consolidating in that area, and eventually it tries to go up. If price breaks the original open price, I'm gonna buy, bro. Kevin, what are you saying? Let's get it straight into it, man. Let's get straight into it. I don't really like to waste your guys' time. Huh? I love to teach, man. I've always mentioned that I love to teach. Let's look at this particular example. When you look further in price, for people that could have entered price market right here, their stop losses would be above here, right? Above here, almost relative equal highs. We did take the take profits right here and the stop loss right here. This was a good sweep. So all the liquidity is currently holding right here. And what happens when price gets to that area? When price gets to that area, we see in the candlestick, we have huge limit. In the candlestick, we have huge bright clusters. Kevin, you're telling us huge bright clusters. What do you mean? So this could be a verified sweep, and I could put my stop loss above it. Why? With a breakout, we have 2 types of things to mention. If this was a breakout, I want to see price break and close above these highs and continue on the retest. If price does come back into the area above here, if it does come back, I know we have just grabbed liquidity. We are going lower. What do I mean? How do you read that using delta? This is where the footprint delta comes in to simplify things. We know, remember the past lesson, we said if I enter a buy order aggressively, my stop loss will be a stop limit order. Do you get my point? Oh my goodness. If I enter a buy right now in the market and I place my button buy aggressively, if I'm aggressively buying, my take profit is gonna be a sell order, because now I've bought. So now I have, for me to make profit, I need to sell to someone. I bought it cheaply, gonna sell it expensively, right? That is my take profit. If I bought, if I sold, my stop loss is gonna be a buy order. Do you get my point? Yes, you get my point, man. It's so easy, man. You didn't get it? Just communicate to me, bro. Send me a message. I'll be very happy to help you. I just don't want to spend a lot of time, because there are people that are really grabbing this, and you're one of them, bro. You're one of them. You're grabbing this. In the next 5-6 months, in the next 1 year, you're gonna be living your dream life, man. Let's get to it. So now let's assume there were sellers right here, and their stop losses were above here. Price goes down. As price comes here, it grabs their stop loss. What is that? If they are selling, their stop loss is a buy order. Note me clearly. If you sell here, right here, your take profit is a different type of transaction. Buy order. Same applies to your stop loss right here. I know you get it, bro. Cannot fail. I cannot fail to explain to you. You're gonna get it by force. By force, my nigga. By force. You're gonna get this shit. By force. Yep. Fantastic. Now look at that. Let's say the stop loss was around this area, right? So let's assume you bought here. This is your take profit. This is your stop loss. Why am I doing that, bro? This could be perfect. Fantastic. Right? Fantastic. So you sold here, and your stop loss is right here. Your take profit is right here. If you sold here, your stop loss and take profit will be different types of orders. or of transaction. Those that have been using MetaTrader 5 to execute your trades, I know now you're the ones that are confused. Listen carefully. If you sell here, for you to make profit, you need to buy again. So your take profit will be a buy limit order. Yes, I've told this in the past lessons. Go back to the lessons. And my stop loss will still be a buy stop order. You get my point? Yes, you get my point. Of course, you get my point. So, which means as price gets back to this area right here, the aggressive sellers, the aggressive buyers that we see in this candlestick are from the stop losses. Do you get my you don't get my point, man? You're gonna get my point. I told you guys, pay attention. Yeah, when you look at this, we've said we know if you sell your transaction to go out to the market, take profit or stop loss are different types of orders. If I sold this, my take profit will be a buy order and it's going to be registered as a buy order. Same applies to my stop loss, will be a buy stop order. It's going to be registered as that. It's going to show sell stop order, but it is a buy limit order. Do you get my point? Yeah. So if price comes back to stop me out, it's going to print buyers right here. And what do I put in my mind? Now that I know, I see strong buying right here. I know it's coming from the stop losses. Do you get my point? I know it's coming from the stop losses because we have stop limits right here. And Kevin, how do you know it's coming from the stop losses? If I see strong buying and price is not going up, what does it mean? It means there's no initiation of strong buyers to push price up. Do you get my point? Yes, you get my point. If there is initiation of this, if there's intention, right? That's the right word to use. If there's intention for buyers to push the price up, it means price will keep going up because they're going to push with very, very strong aggression. If these buyers do find limit strong orders, it is going to first consolidate. It's going to first, write that down. It is going to consolidate. Huge limit wall and strong buyers. This very sell limit wall will hold the buyers, but it will not do the same thing it's doing right here. It will show that buyers are strong. Listen, we have strong buyers in the market that are really willing to buy, and they find a huge limit sell wall. So they're buying, but price is not going up. They're very strong buyers. It will show that these buyers are really trying. They're going to keep testing that area, but there's a huge limit wall, so they won't break it. Because all the orders will be filled. Eventually, we might see a reversal or even a breakout. Depends. But for me to know these as top hands, I need to see buying with price falling. That is why I told you positive delta falling price tells me whether I have take profits there or stop loss hands. These stop loss hands also are executed as buy orders and vice versa. So for this particular example, I know there is stop losses right here because they show strong buying, yet price keeps going down. So people that were really into the market and are getting out, their stop losses are being hit. No one is going to want to buy more, so they will get out of the market. And what happens? Sellers start to dominate the market. You get my point? Yes, you get my point. Let's dive to another type of example. So for this particular example, what do you want to see? Look right here. Probably we have stop loss right here. Stop loss for stop losses for the buyers, and probably they bought here or bought here, and their stop losses are below here. And what happens when market comes to sweep them out? Market will register their stop losses as buy orders. So I will be able to see that there is their buy orders. Listen, I put up something very wrong. I want you guys to listen to me. Let's say they bought somewhere. They bought this side, but I want to extend that to that side. You get my point. They bought and price took them out on their stop loss. So if they bought, it means their stop losses are sell orders. I bought it. My stop loss is a sell order. Whatever I bought, I'm going to sell back because I don't want to lose more. Whatever I bought, I'm going to sell back. I don't want to lose more. That is how your orders are registered, bro. I feel like I should do another lesson on this, but I think that will be in course number 2. because those that have gotten it already do get it. So when I zoom in into this particular candlestick, what do I see? When I zoom in, I can be able to see that price comes with negative delta. Look at this, very negative, yet price still manages to close above the open right here. So all I know, price has came, grabbed the liquidity below. Why are you saying that? Because this liquidity is registered as sell orders and price goes up. So we have negative delta with rising price, which tells me the stop losses have been hit. So we have grabbed liquidity. And what do you want to know? Why do you want to know the liquidity? Because we always know every time we stop out traders, a real good move is about to show up on the opposite side. Real good move is about to show up on the opposite side. So we stop them out and price goes up cleanly. Look at these pips, man. Goes up real good and perfectly clean. So that is stop hands. Another example, I feel like I have another example somewhere in me. Now, this is what I was saying. Kevin, how do you know they were real aggressive buyers? I want you to look at this. Whatever mentioned before is different from this. When we look at this, we see that price tested this level a couple of times. And in these candles, we have really strong positive delta, which means buyers were really aggressive. It is not just stop loss hands. No, it's not just stop hands or take profits. Buyers were real aggressive. If buyers were real aggressive and price did not go down, how do I read it? Excuse. Buyers real aggressive, they come, they get filled in, price tries to go down. And how does price try to go down? Look, buyers are still more aggressive in this candlestick because look at the buyers. Sellers are a little bit, listen carefully. Sellers are a little bit strong. Look at the sellers. 14, 15, 16, 15, 15, and we have most of the zeros from the buyer side. So sellers try to push price down in almost 5 ticks, even though they were so small. Yet buyers that entered the market with 93, 83, 72 huge buy orders did not even push price a little. Instead, even this candlestick closed bearish. It simply means buyers are real aggressive, but we have huge limit walls right there. And they still try to push it up, but price goes down. That simply means buyers were aggressive and absorption happened. So this is not a stop hand. This is an absorption. I'm putting it all together. I know it feels like I'm mixing it, but I know you get it. Of course you get it, man. Because it's so easy, bro. It's better than just guessing patterns. I see double heads, neck man, hanging man, bro. A bunch of crap, bro. Spent years learning that shit, yet it was so useless. We can see that absorption is happening. And what do? I enter onto the retracement back into the strong what? Bright clusters. So what happens if it is the opposite side? Of course, I have examples for you, my guys. I feel like I noted something down for you guys. Let me look at these tops right here. Look at this. What do you see, guys? What do you see? Talk to me, guys. Talk to me. What do you see, guys? Is it an absorption or a liquidity sweep? Liquidity grab or absorption? What do you guys see? So what I see happening in this area is liquidity grab. Why, Kevin? Why saying liquidity grab? We see a little bit of consolidation. The buyers are not as strong as they were in the previous candle. And what happens? Price comes in this area and this guy sells off 2K, 2,000 contracts. What happens when he sells off 2,000 contracts? Price opens, goes, takes this high, sellers do come in a little bit, and price comes, closes below his order. If it was an aggressive buyer with intention to buy, and probably there was big liquidity, price would consolidate a little bit more. If there was no liquidity, price would probably spike up. But 2K sold and price closes below his opening price, man, liquidity sweep. This guy sold off everything that he had, man. Sold off everything. So with this, we want to put a couple of things together. We want to put a couple of things together, my friend. And what are those things we want to put together? We know how to identify positive delta rising price, positive delta falling price. We know how to identify negative delta falling price, negative delta rising price. And we said now we know how to place our stop losses and take profits below the sweeps that have already happened, man. Because you know already it's not going to be a breakout. We're going to study how to see breakouts in a few, but I feel like for this beginner course, you don't have to trade breakouts, bro, because you'll be at a very, very low probability setup, which is not good for your capital as well as a beginner. Yeah? So you want to look at our A plus setups. Yeah, liquidity sweep happens and price closes back in with delta confirmations. Right? We are trading with that and not just liquidity sweep, but you don't know if it might come back, break you out. You don't know which levels are going to stand out. You're just guessing everything. No, we don't guess. Our work has been made easy, completely easy. So we said with this, we can combine it with volume to simply ease things for us. If we put this together with volume, price will be very easy for us to spot. Which type of volume? Right here is my volume. Bring it up. Fantastic. Okay, this is our volume, right? Volume, this is our vertical volume that comes from down. So each bar of volume right here stands for the candle, and they are in a straight line, as you can see. When I touch this candle right here, its volume is this one right below here. It is all in a straight line, and as I can change, you can see. And as you check volume that is building right now, you can see that it will be increasing as well, depending on the volume that is traded inside that candle. You can see that volume is building as well. If there's more sellers than buyers, the color is going to change to red, but it doesn't mean there's 35 sellers in this candlestick. No, because if we're looking at volume, Kevin, it simply means in this trade, in this particular bar, we have 937 buyers because it is white, and you told us white is your bullish color. No, volume is the total number of trades. Yeah, volume is the total number of trades. So guys, I'm a little bit tired. That is why I'm having this, but I'm having these hiccups. But we're gonna focus. Yeah, we're gonna try to focus. So volume is the total number of trades. Doesn't really matter if the color on this bar is 2K and color red. We do still have buyers in that volume because it's the total number of buyers and sellers. Yeah, it is the total. It is not buyers and sellers. Actually, it's not the number of trades, it's the number of contracts. But if I mention the contracts, some of you guys are going to be confused. So let's use buyers and sellers. Let's go with those terms, buyers and sellers. Volume is the total number of buyers and sellers. So even if the candlestick color is red or the bar is red, it simply means the sellers are dominant than the buyers. But Kevin, you're trying to confuse us, blah, blah. Brother, this is the total. 6K. 6K is the total number of buyers and sellers in this particular candlestick. If though the candlestick is white, there's still sellers. How do you confirm that, bro? Stop fooling us, Kevin, man. Fooling us, you think we don't know these things, bro? Stop what you're doing. Let me show you. Let me show you, guys. I'm gonna show you something, yeah? Fantastic. So this is my cluster search settings. We're gonna get a specific candle to look at, and that candle will be, let me see. Let me first remove this session change. Fantastic. So we are only looking at the volume and the delta. So in this particular candle, what did we say? This candle has a total volume of 6K. Volume here, look, this particular big candle right here, this bar has a volume of 6K. Even if I put my cursor right here, my crosshair, it's going to show 6K. But the delta is 2K. And what did we say? Delta is the difference between buyers and sellers. So in this particular candle, we have 2,000 more buyers than sellers. What does it mean? If the total volume is 6K minus 2K, what do you mean? You remain with 4K. So probably the sellers are 2K and the buyers are 4K, which gives us a delta of 2K. But if I go into the numbers, it's going to kind of confuse you. So I don't really want to go into numbers, man. I don't want to go into numbers, bro. Let's use the logic behind. So it's easy for you to understand it. It's easy for you to keep up with this mega session. It's going to be nice, bro. By the time you come to course number 2, things will be so easy, bro. So let's look at this, yeah? 6K in this particular candlestick, what do we see? So Kevin, how do you use volume with what you've been teaching us. Positive delta, negative delta. How do you combine these two? So, number one thing, I want to see my volume in the candlestick that gets rejected, right? Let's say in this particular candlesticks that we looked at right here, look, right here, look at this, right? Look at this, 2K, 1K, 1K. Let me try that. I'm trying to make it bigger for you guys to try understand what I'm bringing up. Why did you say this was absorption happening? Look at this candlestick. What happens as price reaches the area of absorption? What do we see? Volume is 6K. You understand? So we have 6K total traded volume in this particular candlestick. So I want to know this 6K, where do we have most of the 6K volume in this candlestick? I will zoom in. When I zoom in, I see that most of the volume in this candlestick is here, and it is positive. So if it is positive, it means buyers are more aggressive than sellers. What happens in the next candle? Same thing. But this next candle is not really pushing higher. Listen. This next candle, as price is pushing up, because next candle open is right here. Candle goes up, traded volume inside here, and closes right here. What happens? New candle opens, goes, reaches exactly into this volume and closes below it. What happened? Next candle opens, goes, reaches through this, goes above, strong, the stop, the liquidity above here that was up here also gets eaten and comes and closes below the open. And you can see we are shifting. What happens? Next candle, not as much volume as, because here we have a volume of 2K, here we have a volume of 1K, but we have strong price displacement in this candle with less volume than this where we had more volume. What happens? Here we have 2K, strong volume and extra displacement. What happens? Buyers come in again to try and push price up. Right here we have 1K, 2K, 2K. Price tries to push price up, but still price does not close below, does not close above the candlestick with more volume, 6K. This cluster right here that is in white was the cluster with the highest volume in this particular candlestick. If price does not close above it, I know we are going to go down, because whenever it comes retest, goes, closes below it, goes, closes below it. Even right here, comes, closes below it, and price goes down. So that is very easy to note out, but that is not how you're going to be using our vertical volume as a beginner, because this is kind of advanced order flow information. When you subscribe for course 2, I will be introducing a lot of things for you guys, a lot of things that are very simplified yet so deep to make your trading way easy, way easy. I have testimonials. I have students that I've been working with for years. I have a student who was trading for 6 years, had never been profitable. I taught him order flow for 2 months. So everything he had learned now made sense to him, and now he's profitable. So how you're going to be using your vertical volume is very easy, right? We're going to be using our vertical volume in a way that will be so easy for us to identify areas of reversal as a beginner, right? So you will not always trade where there is no volume. So the moment you wake up as a trader, do something, open your charts, come want to start your trading day, you will check for 2 things. Which areas have volume? Look at this. But you wouldn't trade this. This is a Sunday. How much volume you have? 17K. Huge volume, yeah? Huge volume. 23K. Huge volume, yeah? 43K, but on a Sunday, right? What does that mean? Traders are letting go of their trades. It is a weekend, man. They're letting go. And let's look at probably a Friday, but Friday still traders are letting go of their trades. Let's look on a day like Monday or Tuesday or Wednesday, right? Let's look at Wednesday. So as a trader, when you open your vertical volume, you want to see areas of high volume spike. Why? Because areas of high volume spike equals participation of the big players. And you want to trade when the big players are active, because that is when you have liquidity and determined price movement. If there's no volume, like right here, you see this low volume right here, price will be consolidating. You can see it, right? You can see it, man. I don't want to say something that you guys don't really see. Look at this. Low volume right here, price consolidating. Low volume here, price consolidating. High volume spike, price movement. High volume spikes, price movement. So you always gonna come and check out, where do I have my huge volume spikes, like this area right here. So when you check, you have a huge volume spike, you see volume of 17k, you want to see which candle is that with a spike of 17k, this very huge candle. Then we start to look at this candle as it's going up. So this candlestick is going up, and it's showing me that the footprint delta is positive, 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 and all of a sudden 3k. So positive delta of 17k, positive delta in a candlestick of volume of 17k, positive delta in a candlestick of 14k. And what do we see inside the candlestick? We see volume or buying is evenly distributed. Buyers and sellers are mixed in the candlestick. How do I digest this? Remember, for us to know if it is a stop hearts or take profits, the buying is going to happen at the top or in the wick, in the high of the candle. And I expect that candle, the highest probability, the candle has to close below its open. Let's say this is the candlestick that took out the stop hearts. It is going to close negative. Take them out, close below its open. That is the highest probability. If it doesn't do that, probably there is aggression. And as you see in this particular price zone, there was aggression from buyers. Buyers really tried to push price. So there was evenly distributed aggression of volume, but price did not go up or higher. What does that mean? Simply means price got to a huge liquidity wall. And what happens here? Price comes, retests one more time. We see sellers and buyers into this candle, and price goes down. According to this exchange market, because it's crypto, USDT, Ethereum USDT, volume might look a little bit different. Subscribe to my course too. I will be breaking down the futures market. I'll be breaking down gold for you guys, and you will be having very, very clear setups without this mixture of volume distributed. But you can tell that after this spike volume, I want to look at volume. What is it doing? I find out that they tried to push price up, they failed, and what happened? Price went down. And I'm looking another liquidity that comes in right here, strong selling. Then I know they have let off their position, so they're out of the market, they're selling. I'm gonna be out before market reverses on me. If I enter the market and I see strong selling, let's say it's not mixed like this, strong selling, selling comes in, selling comes in, selling comes in, it stays consistent, then I know they're still selling aggressively, so I will follow the trend. Depends on your own type of strategy that we're gonna mention in the nearest courses. So I feel like this lecture is enough for today, because I feel like it's very, very, very long and has put a lot of things together. But for sure, one thing that I have to give you guys, subscribe for others and take out this very strategy that I've given you. We're going to look for areas with high spikes in volume. Then we're going to give them our attention. We want to see what happens. Is price absorbing? Is it rejecting? Is it just sweeping liquidity? What is the delta footprint communicating to me? Then based off the delta footprint, I will be able to get a trade, and with the delta footprint, I will determine my areas of reversal. Next thing in the next course is we shall dive deep into volume profile. We shall define our value area, highs, lows, extremes, vacuums. There is plenty and plenty and plenty. We shall touch the TPO. We shall simply dive deep into all these aspects to build our A++ model. So by the time you're done with a complete course, with a complete package, you will be in position to become a better trader. You will be in position to change your life, man. That is what I mean. So just a glimpse. When I come right here to my tools or simply indicators, I can choose my volume profile to add there and add to chart. So my volume is showing me daily volume. It is not that much because I'm looking at Ethereum, but as we see, If we look at our profile, the line in the middle that is kind of brighter, let me just make it yellow. Not because I'm an NRM supporter, but it's just so easy to see yellow, man. So easy. Volume, style, right here. Color, yellow. Fantastic. The yellow line is our point of control. I'm introducing completely a new topic. Bro, what are you doing, man? You're just confusing us. So we call this the volume profile, and volume profile shows you volume that has been traded at a specific price level. That is horizontal volume. What we're looking at, the vertical volume shows you volume traded at a particular time. And let me just put it back again. Fantastic. So this down here shows you volume that is traded at the particular time of day. This right here, this shows you volume that is traded at the particular price level. And these two things, you can use them to get your A+ setup, man. It's so good. This type of volume is so good. Look at this. What do you see? Point of control, right? Point of control. What we have up here is our value area, or simply these lines is the value area. And what is the value area, Kevin? Value area is where we have 70% of the daily traded volume. So in this particular volume profile that is standing for a day, our value area is here from the high to the low. So in between here is where we have 70% of the daily traded volume. And this volume can, as I was saying, and this volume, the value area, this is a volume profile, our value area, 70% of the daily traded volume. It means this is our fair value price. So price is more likely to stay in the value area. Why? Because all traders agree on this price. The sellers and the buyers all agree that this price level is okay for them to do transactions. That's why a lot of back and forth will be done. That is why every time price comes to the value area low, it is gonna bounce. Comes to the value area high, bounce. Value area low, bounce. Value area high comes into these extremes, bounce. So with this value area, you can put these confluences together, get A++ setup. We're looking at the highs, at the sweeps up here. Before we knew there's another strong level, but now see, strong level plus what we've just learned, your positive delta falling price or our absorption price goes down. Another confluence, two confluences put together equals refining our model. Price comes down, a tick or two to the value area goes up, down, up. So it is always inside there. And look, right here, comes down, breaks, point of control, retest, goes down. So our point of control will always be respected. But when we are using the point of control, of course, we studied that. No, we didn't study yet. We know that our point of control has to be, let me extend it, fantastic, has to be respected a lot of times, and we're gonna respect our point of control from the previous days. Do you get my point? From the previous days. So the point of control of today will not be as strongly respected as the point of control from yesterday. All that I'm gonna explain, guys. I know this is now probably confusing you. Look at this point of control. This is Friday's point of control. Today is trading day. Still Sunday, but it's a new trading day. It's Monday. What happens? Price comes, retest, very strong rejection, goes up. Easy peasy, man. So easy. Comes down to the value area high of yesterday. Bro, it shows rejection. So easy, bro. It's so easy. So allow me to end this course right here. And there's a few things I need to tell you guys. Trading is so good when you master it. Why? Because trading is simply proving to yourself that you can really do and master something. So such a thing kind of builds your confidence. And as a trader, you don't see yourself as other people. You feel a little bit different because you're doing something that 97% of the people that tried it failed. So you are special. You are very consistent. That is the reason why you got to this course. You didn't give up at all. That is why you're here. And I promise you, if you stay with me, you will start to see things. You'll start to see the market in a completely different way because you have real market data, not just propaganda that I've been teaching you, not just everything else, the noise that is on the media. If you go onto YouTube, you're going to see that the platforms that we use, let's say Atas or anything, they do have YouTube channels, but they barely have subscribers. Why? This information is never promoted. Why? People are scared of numbers. And the people that are scared are pussies, man. They don't really want to do the work. If you can do the work, go into order flow, learn it because it's so easy. And I've simplified everything as easy as I can go, as easy as it can be. You have learned it. So you go to course number 2. I'll be introducing a few more concepts, step by step. And you will see that trading is really easy. Trading is really, really good. Trading can be profitable. It's not just guessing, it's not gambling, it's not guesswork. It is working with real market data given to you from the data feeds or the Chicago Mercantile Exchange or New York Stock Exchange market. Anything, bro, the commodities exchange market, wherever you're trading, whatever asset, whatever exchange market, you can have access to that data. And working with that data, you can play like the big players are playing, bro. You just need to decode or dilute their information. You just need to use the information, the data you get in a specific way to become a good trader. I will be ending this course here, and one word from me is, guys, you need to focus. You need to become a better person. Follow your rules. If you say I'm gonna wake up at 6 p.m., wake up at 6 p.m. I woke up at 3. You're gonna say you're gonna wake up at 6 a.m., wake up at 6 a.m. I woke up at 3 a.m. Right now it's 7 a.m. Check my time. 7 a.m., bro. I woke up at 3 a.m. to record these lessons. Be disciplined. You can see all the past lessons, bro. Wake up at night, do the work at night. So just simply set a playbook and follow each and every rule. Be as disciplined as you can be as a trader. You know, Napoleon Hill, wasn't Napoleon Hill, I don't know exactly where I got the quote from, but he said, if the why is powerful, the how is easy. You need to get a strong why as a person. Why do you have to be a trader? Why do you want this to work out? Why do you need to make money from this? Why do you need a better life? If your why is stronger, the how is easy. Do you get my point? So my type of why was really, really different from yours. My why was so powerful. Grew up with a single mother. At 5, I changed a country, came from Rwanda, went to Uganda. At 5 years old, grew up from Uganda, studied from UPE schools, government schools, man. Very, very cheap. Lived a very, very bad life. My why as to why trading had to work out was stronger than you think. 2024, 2024, yeah, I fully left school, dropped out of school, tried to focus on trading. Dropped out, I didn't really join uni. I thought it was useless, man, because this shit was gonna work out, and I don't regret this shit is working out. What else do I need? I make money from this. I'm not telling you drop out. You can put the two together. I'm just telling you your why needs to be powerful. If your why is not strong, probably this is not your course. So allow me to end there, and course 2 will begin from exactly where we've set off. We're gonna be building step by step, but by this information you know right now. I feel like this is enough information for you to work with. In the next courses, course number 2, course number 3, I'll be explaining B and P patterns, how to use them, how to use the D distribution day, how to use the double distribution day, how to use our TPO, how to use a candlestick, how to use footprint B and P patterns. It is going to be very interesting, and it's going to be very, very insightful. Thank you guys for attending this course, and have a good day. I wish you a good journey as a trader, and stay safe.